Precious Metal and Battery Summit 2018 here in Zurich, and with me here is now on day 2 in the morning, Jeff Pontius, the CEO of Corvus Gold, and we want to get a nice update from him. Jeff, good morning.
Good morning, Jochen.
So, at least 1 year ago, we spoke about your terrific project in Nevada.
Yep.
And so maybe you can give us a little bit of an update on that, because I think you had a favorable PEA, you did some very good drillings, and let's get inside that. Maybe we start with the drilling first.
Sure. The Motherlode deposit has been expanding, so we've posted the first resource on it back in September of about 1.4 million ounces inside the deposit. We then incorporated that with our North Bullfrog deposit, which has a couple million ounces in it. As you say, we produced our PEA. That created a deposit that has about 3.6 million contained ounces that will be mined, about 2.6 million recoverable ounces out of that at cash costs in the lowest quartile. So very favorable, about a 1-to-1 strip ratio, so a nice open pit project in Nevada. And the drilling, as you say, has been very exciting for us. We've now drilled outside the resource area. We see the deposit extending to the north. The latest drill hole results are like 65 meters of 1.5, 1.6 grams a ton.
Wow.
And off to the west, we've had some very high-grade intercepts with 20, 30 meters of 2 to 3 grams per ton.
That's gold only, or you have something associated?
Gold only, but we do have some silver in this particular deposit at Motherlode. It's about a 1-to-1 ratio. At our North Bullfrog project, there's about 10-to-1, so 10 grams of silver per every gram of gold. And so we produce about 8 million contained ounces of silver out of this PEA that we just published. And that looks very exciting. The first 4 years of that production averages about 350,000 ounces a year. So this is a big mine. This is the scale of just about any major producing mine in Nevada right now. So it's quite an exciting time for us.
Fantastic. Yeah, I mean, Nevada is a super place for mining. I mean, it has such a long mining history, and you have all those big names in your neighborhood, I would call it, like the Barracks and Coeur d'Alene and who is there. And so from that side, infrastructure is perfect. That's all fine. Yeah. So let's dive into the PEA a little bit more detailed, I would call it.
Sure.
What is the production profile?
The production profile is life of mine, 9 years long, averaging 280,000 ounces a year. But in those first 4 years, gold, in those first 4 years, we do have production at about 350,000 ounces, which is very significant early on. We have a very active exploration program. So our goal right now is to backfill those last 5 years and keep that production up there above 300,000 ounces. So that's a great goal for us. We're actively drilling right now, having some good success expanding the resource. Most importantly for us, the capital is relatively low.
How much is it?
It's about $424 million for initial capital on this project. And when we look at that compared to production ounces, that's very competitive right now for us. And, you know, as I say, the cash costs are quite attractive for us now.
How much are they?
The life of mine cash costs are about $680 an ounce. In those first 4 years where we're producing a lot of ounces, they're about $560 an ounce. So those first 4 years are going to be very, very productive.
And what would that mean, cash costs, and now the all-in costs for that?
And then the all-in costs with capital, with everything, are about $825. So it's definitely a project that's got some good margin.
That's $400 margin today even.
Yeah, and our after-tax NPV 5% discount on this project at $1,250 gold is about $585 million with an IRR of 38%. So pretty attractive IRR. It looks like a good development project that can go forward. We have, as you say, we have some great neighbors. Coeur just purchased our neighbor to the south in an acquisition where they paid $120 an ounce for our neighbor to the south on their resource ounces. Northern Empire, which was a company to the south of us. And Anglo Gold is very active to the north of us. It looks like they have a new discovery. So the district is very active right now. And it looks
like you are sandwiched.
Yeah, it's a great place to be, let me tell you.
No, I mean, with those favorable economic numbers,
Yeah.
and let's assume your drilling hits more and more ounces. I mean, you make the bride even look more good, right?
Yes. Yeah. Undoubtedly, there will be a district consolidation go on in the future. So Corvus will undoubtedly be part of that, I imagine. So that's all good for our shareholders. So good
absolutely. Who are your shareholders now?
The largest shareholder we have is AngloGold Ashanti. They now own almost 20% of the company, so they've been acquiring stock in the company. Tocqueville is another very large shareholder of us, Tocqueville Gold Fund out of New York. They have 19.8% of the company. Joe Foster's managed fund at Van Eck, very important investors in the gold sector, have 8.3% of the company now. Our management group has about 6.5%, so we're still hanging in there.
Skimming the game.
Yeah, that's right.
Fantastic. So what's the cash position, and are you financed for 2019? And let's say, what's the game plan for 2019? Now, obviously, you want to drill more.
Right. We're actively drilling now. We'll continue drilling through what our fiscal year, which ends in May, fully funded through that. Our burn rate's about $500,000 a month with our active drilling program. We have about $5 million in cash now, so we're good to go on to that point in time. Undoubtedly, the company will probably raise money again as we have continued drilling success in the future, very similar to what we have been doing over the years.
Fantastic. Now you had the PEA. How likely is it that you will start, let's say, a pre-feasibility 2019-2020? Is that already possible? Because I know Nevada is quite strict with the ruling to develop a project into production. It's easily 30 months altogether, with environmental assessment, then the BLM stuff, and water and all that stuff.
We've sort of moved forward on that front over the last couple of years and collected our baseline data so that we can move quickly to a permit on this project. It's probably about 24 months away from being able to have something in hand so we could start the initial phase of this construction of the project. Right now, Corvus is very focused on advancing the metallurgical part of this, where we see some real opportunity. As the deposit continues to grow, we're developing probably a new mine plan next year because certainly the resource looks like it's getting bigger. So I would look for an update in the summer that we'll be looking at probably a much more enhanced development plan, and there'll be some decisions to make at that point in time.
Fantastic. Great. Well, Jeff, thank you very much. It was a super update. Very clear, very precise on the point. I would say keep it going. You have the money for it. And the project looks terrific.
Thanks, Jochen.
Maybe, probably one thing I forgot to mention. I think you have the possibility that you can put a facility in the middle of both projects, right?
Yes, there's right now 4 deposits that are within about 15 kilometers of each other. They'll be processed through a central mill facility. 2 big heap leach projects on each end of the project that we have. So and all the production will be out of the same central facility. So it makes it very efficient for the development of the asset.
Exactly. Perfect. Thank you very much.
All right. Thanks.
Ladies and gentlemen, it was Jeff Pontis, the CEO of Corvus Gold. And you heard it, everything is in very good shape. The company has enough money to fulfill the work programs until the mid of next year. And the PEA looks very favorable. I would say $820 all-in costs, even at this gold environment, is $400 margin before taxes, which is very nice. And also the resource is growing and growing. That's exactly what we want to see. And as he said, probably 24 months is away from a possible construction, I would say, start. And let's see how that goes. We look forward to some good news from the company. Check it out. Thanks for watching us. Bye-bye from Zurich.